Well, stocks are off to a strong start this morning. Of course, it comes after a historic sell-off in yesterday's trading session. Let's get some more perspective on the markets. Joining us here in studio, Barry Schwartz, Chief Investment Officer and Portfolio Manager at Baskin Wealth Management. Always nice to see you. I just asked you during the break, what's the most common question you're getting right now? And it is literally, should I buy or sell?
Absolutely. I'll get a phone call from a client, obviously, that's nervous and seeing the market going down and wants to maybe take some action, maybe wants to sell. And then the next phone call will be, aren't markets cheap? Shouldn't we start buying? And so that really tells you what's going on. Nobody knows. Nobody knows what's going to happen next. All we can do, John, is look at history, look at what has happened in other corrections. Obviously, no correction is the same. We never had a pandemic and virus that worried the markets before, but clearly there's been 32 corrections since 1980. Within 1 year, with the S&P 500, over 90% of the time, markets were higher 12 months later. Not only did they recover what they lost, they moved higher, 90% of the time. So hopefully this year, we'll look a year from now and say, wow, wasn't that a great buying opportunity? Why in the world did I react so crazily? Why did I reduce my time horizon to 1 minute when I was a long-term investor only 2 weeks ago?
So is that stat at the center of your strategy? In other words, have you been buying or selling or just waiting things out?
So that stat isn't at the center of my strategy.
Okay.
We have to fight this and live day to day here, but nobody knows how things are going to recover. But ultimately, we know 2020 is probably going to be a write-off in terms of corporate earnings. Companies are slashing guidance. Companies are not going to meet any expectations, and this will last for a few months and a few quarters. That said, you have to start looking out to 2021. I'm old enough to remember 2008. I have the battle scars. I remember in 2009, the market started to bottom, March 2009. The headlines did not improve. The people who came on TV and on the radio were telling you things were getting worse. Sell all your stocks. The market bounced. The market started to recover because it started to look forward to better times ahead. We hope at some point the same thing will happen again here. It's going to be a process we're in.
I'm glad you mentioned some of the companies that are coming out and sharing their honest assessment of what's happening in their business. I mean, whether it's Synovus just today saying, look, we saw that oil shock yesterday. We got to be cautious with our cash.
Yeah.
Or in the airline sector, I think Delta came out today and was like, look, we got a reality check here for our business. But how do you think the market will react to those individual stories? Because normally, when the markets were reaching all-time highs, if a company came out and warned, that was sort of a logical, stock's going to be down today.
Correct.
How do you think these companies will perform after, like we're looking at Delta stock right now, after it's dropped the way it's dropped, it's actually up today and they give us some cautious comments. So.
Oh, and one should expect the numbers that Delta is going to release over the next couple of quarters is going to be awful, just a disaster. But at some point, bad news gets priced in. Bad news is bad news, and the market will look past it. You're right. When times are good, only a few weeks ago, if you had good earnings, your stock was rewarded. If you had bad earnings, you got slaughtered. That may still continue going forward, but I think it's well recognized which companies are going to be hurt here. Things in travel, entertainment, banks, oil, leisure. No question, everyone is going to be suffering and suffering bad.
Well, we're doing some disclosures just as we do with all of our guests on Delta, but that is a name that you sold.
Correct.
And Hyatt, a hotel operator.
Correct.
These are names you've sold. And then you did some buying.
Yeah.
We were talking about Netflix as like one of these stay-at-home stocks. You were buying more Microsoft, which was one of the most loved stocks in the market.
Correct.
They got that rival product to Slack too, I guess, if people are working at home.
So I guess I would say we should have sold everything on the first day the market started to go down, right?
What do you mean?
Yeah,
honestly?
Yeah, well, because clearly, if you look in hindsight, if I had perfect hindsight, we should have liquidated everything. But, once you start cherry picking and saying, that's impossible, that doesn't make any sense, that's not how we operate, we're long-term investors, then we say, what companies do we think are going to be impacted more than just 1 quarter, more than just 2 quarters? We looked through our portfolio, we decided that Delta and Hyatt probably are going to be impacted the most over the long term. Then we decided what companies we think will be strongly placed for a rebound either later in 2020 or 2021. And we have to think that companies involved in technology, capital-light businesses. We didn't buy Netflix because of the stay-at-home due to the virus. We bought it because we just think the long-term runway of growth is so tremendous for that business.
Yeah, they got a lot of subscribers.
Exactly.
Okay, before you go, we referenced Warren Buffett earlier in the program, who's sitting on like $128 billion in cash. And we know Mr. Buffett, sometimes he gets a phone call with an investment opportunity, sometimes he's waiting to pounce into the market. If someone has some cash in their portfolio, or someone has done some selling recently, and now they've got the cash there. Now, based on what you were saying, sounds like this is a story that's going to play out not over the next couple of months, but maybe over the next couple of years. But at what point, if you're watching the ups and downs, do you feel like that cash has to go somewhere?
I guess Warren Buffett would probably say, you know, the market has moved violently down in a short period of time. But if you look at it over a number of year periods, it's not that bad. And even year to date, it's not that bad. So maybe he doesn't see tremendous bargains. Remember in 2008, Warren Buffett wrote that famous op-ed where he said, buy American stocks, I am. He was completely wrong by 6 months. But if you look at 1 year, 2 years, 3 years, 4 years from that op-ed, he was totally right. So I would expect Warren Buffett's probably looking at some significant deals. We saw he made a purchase of Delta. We were selling Delta. He's buying Delta. We've got a different strategy and different types of investors. But ultimately, now is the time, in my opinion, to scale into positions. Look at great companies that you want to own for the next 2 years and 3 years. You don't need to be a hero. You don't need to time everything. And I think that's